here are my 2 points. One,
if you're buying.
And number 2,
if you're selling. If you're not quite sure where to start.
Thank you for doing a good job as always, and your analysis is spot on.
Talk to Dan Gemus and his team. Find them at dangemus.com. And now, filling in for Dan Gemus, your host, Joyce Blackmere.
Welcome back, everyone. I'm Joyce Blackmere, Director of Sales and Broker with the Dan Gemus team. I'm your host today, covering for Dan. And with me in studio, I have Heather Marintet, Sales Rep with the team. Hello, Heather.
Hello.
How are you?
I'm fantastic.
Awesome. Are you ready to talk about market cycles?
Always.
Oh, perfect. Awesome. Well, listen, we have experienced through COVID, a massive seller's market. We went through a period where we had basically 2 weeks of inventory on the market. Sometimes less.
Yeah,
and
felt like it
in the peak period, and lots of multiple offers. And now we've sort of shifted back towards the buyer's market side. I wouldn't say we're really necessarily in a buyer's market per se. It's more balanced.
It's definitely more of a relaxed feeling than it was a few years ago.
But it's almost like whiplash, right? Because now we've gone from, 20 offers on most properties to not typically holding offer dates anymore.
Right.
Not always, depending on your price point, of course, not always getting multiple offers. Sometimes we're setting offer dates and we're not getting offers at all. So it's just a different market. So let's talk about this a little bit. So because understanding real estate cycles really does help shape investment strategies. You're able to adapt to the market and understand the phases and what influences property values, investor behavior, and just like overall stability in the real estate market. So the real estate cycle typically moves through 4 main phases. So we have an expansion phase, peak phase, contraction phase, and trough. So let's just quickly go through these 4, and then we can sort of go into what we're seeing in Windsor, Essex. How's that sound? Okay, so during the expansion phase of increasing demand, rising prices, and robust construction activity, investors often experience strong capital appreciation and high occupancy rates. Economic growth, low unemployment, and favorable financing conditions attract both buyers and developers eager to capitalize on optimistic market conditions. So that would be our expansion phase. I would say that would have been peak sort of COVID.
Yes. Agreed.
As the market reaches its peak, signs of saturation become evident with prices stabilizing or peaking. So that peak was sort of like that March, April 2022.
Yep.
Demand begins to plateau and speculative activities intensify. Caution is needed as excessive optimism and inflated valuations can lead to market corrections or downturns. The contraction phase, so the third phase, follows, marked by declined demand, falling prices, and rising vacancies. Economic indicators such as high interest rates, reduced consumer confidence, or oversupply contribute to market corrections. Investors often face challenges in this phase, requiring strategies such as portfolio diversification, cash reserves, and adaptive property management to weather downturns and position for recovery. However, even during this phase, investors can capitalize on discounted property prices, distressed sales, motivated sellers for various reasons, strategic acquisitions, repositioning through renovations, and diversification across resilient markets may offer opportunities to enhance portfolio value and position for long-term growth amidst market downturns. So finally, fourth phase, we have the trough phase, which represents the market's lowest point where prices stabilize or reach a bottom level. Demand begins to recover and investor sentiment cautiously improves. This phase may offer opportunities for investors to continue to leverage purchases of discounted or distressed properties and position portfolios for future growth as market conditions gradually improve. So my opinion, okay, I'm going to put my opinion aside. I want to hear Heather's opinion. Which phase do you think we're in?
Well, we're definitely in, I kind of feel like we're between a couple of phases. We're not totally, I mean, we're definitely past that expansion and growth phase. It's starting to constrict a little bit. So we're definitely feeling some of that constriction, but it's not entirely all across the board. It can be, it's a little, it's spot specific, but we're definitely in that constriction phase where people are slowing down a little bit. Prices are starting to plateau a little bit as well. So yeah, no, we're definitely, in my opinion, in that phase.
Yeah. And I mean, it's opinion based for sure. I'm in agreement with you. I feel like we're sort of in that position as well. And again, it's price dependent because
and that's why I was hesitant to say 100% we're in this, because it's location dependent, it's price point dependent. There's so many different factors that it's not entirely, they're not entirely all behaving the same.
Yeah. The interesting part to all of this to me is that we're still in a housing crisis. We do not have enough supply to meet the demand. And although properties are taking longer to sell right now, and we're seeing more and more listings and fewer sales right now, that doesn't mean that there doesn't need to be just one sort of economic factor that may create a tipping point where we see that go back the other way. At the end of the day, we're really at about roughly countywide, we're about 3 months-ish, little over 3 months worth of inventory on the market right now. So what that means is that if we didn't list any more properties as of right now, it would take roughly 3 or 3.5 months to sell all the properties that are on the market.
Right.
So when we speak months of inventory, that's what we mean when we use that term. But that being said, we have price points that are super, super busy right now.
Yes.
We have a price point that sort of falls within that roughly that 350-ish up to about 600 is where we're the most active.
Right. Not surprisingly, the most affordable price point, right?
Yeah. And with our average price point sticking in around that 570,000 range for the month, and also year to date, we're in around the $570,000 price point. So that's been pretty much the average price range for quite some time.
Yeah, it has stayed pretty consistent in that for the past few months.
Range. Yeah. So what I want to do is I want to talk about a couple of different things that we use as market indicators when we're helping our clients determine when it's a good time to buy, when it's a good time to list, and help them too with pricing strategies when it comes to actually putting a dollar value on the home.
Right.
Okay. So what are some of the main things, Heather, that you weigh on when it comes to the stats and how to help position your clients effectively?
One thing that helps them understand what's happening in the market is days on market. So what's happening in their area? How long is a listing lasting on the market? Because previously, it would have been maybe 5, 7, 10 days max, whereas now that has changed considerably in some areas. So how many days other listings are on the market for is a really great statistic to use.
Yeah, absolutely. And then we also consider the new listings and sales ratio. So how many new listings did we have in a month compared to the number of sales? That's an important one to follow as well. Now, when we're watching the stats at month to month, it's really truly we're usually looking at the larger scale, so all of Windsor and Essex County, but those numbers can obviously be broken down to towns, they can be broken down to price ranges, they can be broken down to neighborhoods.
Right.
So for example, I would say if you're selling a home that's in the average price point, the active price point, your pricing strategy is probably going to be a little bit different than if you were in the $1 million+ threshold, which is still seeing activity, of course, but your strategy might be different because the number of new listings or the number of sales may be differing, which is something to really take into consideration if you don't want to go stagnant, if you don't want to be one of those, we expect higher end properties to be on the market a little bit longer. Not always, but sometimes. So that's one to take into consideration. So typically speaking, when we look at the new listings to sales ratio, anything 40% or lower indicates a buyer's market. So that means that 40% or lower of homes are selling,
Right.
That compared to the listings.
Right. Okay.
Anything sort of that 40 to 60 range indicates balanced, and then 60 plus indicates a seller's market. We had one point where our sales to new listing ratio was at 85 or 87%, somewhere in that range. That's pretty crazy. Like that's a strong seller market indication. That was back through the COVID days. And now we're seeing, that in around the mid 30 mark, mid to high 30s, right? So that's a big change.
Yep.
Now that does indicate possibly sort of balanced buyers, but like we say, economic factors play a big role. I mean, we're looking at seasonal adjustments because it is summer after all, and traditionally in a summer market, we're not quite as busy as we would normally be. We're looking at unemployment right now. We're looking at high inflation. We're looking at a lot of different factors.
Yeah, there's a lot of factors adding into this.
Yes. So something else. So what did we say? We said days on market. We said
Listing to sales
list
ratio.
to sale ratio. We're also looking at the price point is right. Like list to sale price ratio is another factor to take into consideration. And we're still seeing a lot of properties, on average, they're going over 100% of the asking price, even though
in
they're
some
on the market.
situations they are. Yeah.
But there's a lot under. Like I pulled the stats. I told you this last week. We're still seeing, when I pulled a week's worth of sales, I look back and there about 30% of properties are still going at or under the ask price.
Right.
Now, countywide, all price points. So it's not the best.
All different strategies.
Yeah,
There's so many
exactly.
strategies being employed with that as well when it comes to the listing price, right? So that's a big part of the picture.
Yes. Absolutely. So Heather, if you are talking to your clients today, just walk us through real quick what it's looking like when you're going through these stats with them.
Well, I'm specifically pulling statistics for their neighborhood, their area. So how long have other houses been on the market, so they can gauge an expectation as well, because you want them to just know what's happening, because likely what's happening in their neighborhood will be very similar to what their listing will experience. But looking at recent sales and sale prices of other homes nearby, making sure that, we're doing a pretty good analysis of comparables so they understand what the best listing price strategy could be for them. What have other strategies been that have been used in their area as well with other homes? Were they underlisted in value and they sold over, or have they been listed closer to expectations? And has that worked? Has it panned out for those listings, right? Because you can kind of see with the property history of pricing what strategies were employed and whether it kind of worked out or not. So that helps me gauge what could work in that neighborhood as well.
Yeah, for sure. And then also too, what's on the market currently, right? How many are you competing against that are similar to yours in your neighborhood? Okay, we could talk about this for days, but unfortunately,
sometimes we do.
Yes, yeah. Well, we do. Yes, 100%. But we do need to take a quick break. So when we come back, we have Christian Janice joining us with a legal tip. We always appreciate Christian. And a little bit later on in the show, we're going to give away a gift card for the Richmond Popcorn Company. There's still tons more to come here on the Dan Gemus Real Estate Show.